Hey everyone, welcome back to Corporate Decoder. Today, we're diving into SEACOR Marine Holdings, a company that's all about boats that service the oil and gas industry. This Form 8K filing is like peeking behind the curtain of their latest financial performance, so buckle up. This report came out on February 26, 2025, so it's a snapshot of what was happening with the company at that time. SEACOR Marine Holdings is the company we are talking about. They're officially registered in Delaware. This section is about how the company is doing financially, also called their results of operations and financial condition. The company released what's called an earnings release. Basically, it's a press release that talks about how much money they made, what their expenses were, and overall how they performed. It's all about the numbers. The actual earnings release is attached as an exhibit. That means it's included with this report for everyone to see. This part of the report lists all the exhibits, think of them as attachments, included in the report. These attachments give more details and back up the information in the main report. The company is attaching the press release that summarizes their earnings for the last 3 months of 2024 and for the entire year of 2024. It's how they officially told the world how they were doing. Now let's talk about what all this means for SEACOR. Unfortunately, this 8K filing itself doesn't contain the financial numbers, it only references the press release. So let's imagine what we might expect to see in that press release and what it would tell us about SEACOR. If SEACOR's earnings release showed a significant increase in revenue, that would suggest they're doing a good job getting contracts and utilizing their boats. If their costs are well controlled, we would also see an improvement in the company's profitability. On the other hand, if the company's revenue is down compared to the previous year, it means they might be struggling to secure work, facing increased competition, or dealing with lower rates. Rising costs would squeeze their profit margins. This can be caused by rising fuel prices, maintenance, or wages. Now, let's assume for a moment that the numbers show SEACOR's profits went up, but their debt also increased. That could mean they're expanding aggressively but taking on more risk. On the other hand, if profits stayed flat but they paid down a lot of debt, it could mean they are prioritizing financial stability over growth. The oil and gas industry is sensitive to economic ups and downs, so SEACOR's numbers will be largely dependent on the global oil market. If oil prices are high, SEACOR will likely do well, but if there's a downturn, it could affect their revenue and profits. Looking at this report, it's a bit tricky to give a definitive opinion on SEACOR's direction without seeing the actual earnings numbers. The oil and gas industry is known to be volatile, so SEACOR's success depends on how well they manage risks like fluctuating oil prices and competition. If they are managing their costs well and they're securing long-term contracts, they're likely in a good position. Overall, SEACOR seems like a company with potential, but it's important to keep an eye on the factors that could affect their performance. Thanks for watching. If you enjoyed this breakdown, please like, comment, and subscribe for more deep dives into the world of corporate filings.